Good afternoon, everyone. Welcome to my weekly analysis for the precious metals market. My name is JR. Today's Friday, May 8th, 2015. It is 1:28 p.m. Eastern Standard Time. I'd like to wish everyone a happy Mother's Day. I hope you guys all have a great Mother's Day weekend. And I hope we can all spend some quality time with our loved ones, right? Without further ado, let's get right to the technicals. I didn't do a video last week. Really, just the market really been trading sideways. Nothing new. I mean, the key levels are still there. They're still holding. So at this point, really, it's just a matter of a breakout in one or in a direction, right? So this is your weekly chart, right? This is your trend. Market is still creating higher, lower highs, right? So you have a high, lower high, lower high, lower high. That's your weekly chart. This seems to be the key level here, around 1167. Gold has not seen a close below 1167 at all, besides this 1 week. Again, this is a weekly chart, so each candle does represent a week. And again, this level here, 1167. We've only seen one close below this level, and that was the week of March 9th. Okay, ever since then, really the market has just been trading sideways. So these are the levels that we want to look out for, right? This is a break above this level here. We'll most likely send this to test this trend line up here, and a break below this will probably complete the head and shoulders move that I've been looking forward to, or that I've been mentioning for some time. This could rally from here, or it could come down over here and rally. Remember, the head and shoulders formation is not a bearish formation. What it is it signals a big move to the downside if the shoulder line breaks. So if this level breaks here, this will suggest a big move to the downside, targeting the mid 1000 range, maybe around 1050. Okay, so let's see what happens. Stochastics are still really pointing kind of south, so again, a test of this level here is definitely possible. 20-day moving average is still moving sideways, pointing to 3 o'clock. That's neutral. And again, as I stated before, this is the key level here to look out for. A weekly close below 1167 would be very bad. The way it looks now, it really does look like we're just trading sideways, and it does look like a move back up above this level. We'll probably call this we'll probably be calling this a bottom, okay? Because once you have so much price action in a key support level, especially after coming down, right? After coming down, what? 40%, okay? Especially after coming down 40%, you might want to start thinking to yourself, okay, this looks like it's dropped. Production cost is at 1200, and it just doesn't look like it's probably going to keep dropping. So a break above, especially a break above this level here, the 1300, then we can start seeing a shift on trend. But again, 20-day moving average is still pointing south on the monthly, but we're not doing a monthly analysis on this one. Okay. All right, so as of now, we'd like to see this market come back up here and break this level, or come down here and break this level. You break this 1179 level, you're most likely going to retest the 1150 level. Okay, that's your gold. Let's look at silver. Okay, silver weekly. Silver weekly trading in a triangle as well, just like gold. The break above this level here will probably send this to test this recent high. What you want to see is either a move like this, because you're going to continue to create lower highs, or you're going to see a break. And this is when it's really going to get interesting. Once we surpass this 1737 level, which we've established as resistance, okay? Now, once we break this level, now we can say, okay, we've taken out a significant level of resistance, right? And once we take out this level of resistance, okay, now we can say, you know what? Now the picture now, it looks like we have found a bottom here, and now the market needs to start treading higher, right? And that's what you would expect, not necessarily in this exact same pattern, but again, what we want to do is I pointed out how important it is for us to take out this 1850 level. And it's extremely important because this is the level that will destroy this pattern, this series of lower highs, okay? As far as the bottom goes, as far as the lows go, we are not creating higher lows. I mean, we're not creating lower lows. So again, a bear market, you have a high, you have a high, you have another high, and then you have a low, another low, and another low. So in order for us to see a change of trend, we have to see some sideways consolidation, and we have to see a move to the upside. Usually that sideways consolidation is done within the 20-day moving average band that I have here. And as you can see, we are trading within this band. What we have is we have a move, and I've said this, you guys are probably bored of me saying this, but a move up to the 20-day moving average, test the 20-day moving average, and break established resistance, okay? As of now, we are still within this 20-day moving average, and what we need to do is we need to see something like this. We need to see a move up, back down, test the 20-day moving average, 20-day moving average pointing at 3 o'clock, that's neutral. We want to see a move above, right? We don't want to see a move below this level here, because this is a low, this is a higher low, and this is the most recent low right here. So we don't want to see a move below 1570, and it could be the case where we're not going to see the move below 1575. This could very, very well be the last time we test these levels. Okay, we can do something like this, and again come back, retest the 20-day moving average. 20-day moving average can start to turn up, and we have established a new bull market. And I will also add that silver is down 71%. That's how much silver is down in the last 4 years. 4 years. In the last 4 years, silver is down 71%. Remember, silver is not an equity. Silver will not decline to $1. Silver is never going to go down to 50 cents. It's an industrial metal. Okay? All right. And what we have here is a metal that has been pushed down and pushed down. And I just don't think they can bring this thing down to 10 or 11 or $12. I think worst case scenario, I think if we see this this triangle break, let's delete some of this. I think if we see this triangle break right here, all right, I think what you're going to see is, even if we break to the downside, I think we're going to find some resistance roughly in this area here. Okay, this is where you would look to find some resistance. I'm sorry, some support. Okay, so if this level here breaks, then you're looking to target roughly, I would say, the 13.5 range. That's probably the level that you'll be looking at. That's probably going to be my last purchase. I wouldn't buy any more silver as far as long-term positions, because again, you want to see if this long-term trend line is going to hold, which again, I'm pretty confident that if it is tested, it will hold. Okay, so that was your weekly chart. This is your daily chart. Again, silver also trading sideways, and again within this triangle. We are patiently waiting for a break of this triangle so we can get a better picture of what the future holds for these metals, at least within the next 3 to 6 months. Okay, let's see what happens. Currently above the 20-day moving average on the daily. 20-day moving average is pointing to the upside, and you do have some nice candles, some nice bullish candles. So let's see how this market works, and let's see how this market is going to turn out. I will add before I go that it does look like prices are squeezing in pretty hard here within this triangle. So I wouldn't expect another week or two of trading. I would expect maybe at worst case scenario, maybe if not this week, the following week, before we see the breakout to the upside or to the downside. All right. All right, guys, I hope you guys all enjoy your Mother's Day weekend, and I will see you guys next week. Bye-bye.